Short exercise 3-6, adjusting entry for prepaid rent. So on April 1st, Soccer Kicks of Toledo prepaid 6 months of rent for $4,800. So let's take a look at our requirements here real quick. So we need to record the journal entry for the prepaid rent first, then we need to do our adjusting entry at the end of April to account for the rent used, and then lastly we're going to post the transactions to our T accounts. So we can close out of this as our requirements will pop up above each section of the problem. So here in requirement 1, we are recording the journal entry for the April 1st payment. Record debits first, then credits as always, and select the explanation on the last line of the journal entry table down here. Alright, so Soccer Kicks of Toledo prepaid 6 months of rent for $4,800. So we know the amounts that we're going to be working with here for this journal entry for the payment. The prepayment of the rent is going to be $4,800 debit and a $4,800 credit. But then what are the accounts? So what are we getting out of this transaction? Why did we spend this $4,800? So we're prepaying 6 months of rent. Now, have those months of rent been used up already on the very first day of April? No. Therefore, they have a future value. So that is an asset. And so what asset is that called? It is called prepaid rent. And I'm going to be debiting it because it is an asset and it is going up. So prepaid rent, make sure you don't put rent expense. It is prepaid rent. And again, we're debiting it because assets go up with a debit. So that's why it's on the left side here. And then how did we pay for this? We paid cash. And then which way is cash going? It is going down. And since cash is an asset, it gets credited in order for it to get lowered. And again, that's because assets decrease with a credit. So then we need an explanation down here at the very last line, and that is to record rent paid in advance. It is not an expense yet. So let's go ahead and check our answer. Well done. Okay, now it's April 30th, so the end of the month. So for requirement 2 here, we have to record the adjusting entry required at April 30th. Record debits first, then credits as always. Select the explanation on the last line of the journal entry table down here. So up here we bought 6 months of rent and it is now the end of April. So do we still have 6 months worth of rent here on April 30th? No, we only have 5 months in there. So we have to show that we've used up 1 month of rent. So then how much is 1 month of rent? We take this $4,800 that we have spent and we divide that by 6 to get the monthly cost of rent. So we can go ahead and get our calculator open to do that real quick. So 4,800 divided by 6 months equals $800 of rent cost per month. So since we used up $800 worth of rent, we're going to go ahead, debit and credit that amount. And then we need to lower this prepaid rent asset by 1 month. So in order to do that, we need to credit it. So we will put prepaid rent right here for the credit. So the second line down. And again, we are lowering this asset by crediting it, since in order to lower an asset, we need to credit it. So then we need to think about our debit line. What account is this going to be? Well, whenever we use up prepaid rent, we have to record rent expense. And we're going to be debiting it. So we have rent expense here. And why am I debiting that? It's because expense is increasing, and expenses increase with a debit. So that is why. And then we need our explanation here on the last line. So this is to record rent expense. I'll go ahead and check our answer. Fantastic. Okay, we'll click OK, and then it's going to move us into requirement 3, which is our T accounts here, and they are going to have us ignore the cash account. So keep that in mind. That's why it's missing from down here. So using T accounts, post the journal entry and adjusting entry to the accounts involved and show their balances at April 30th. Ignore the cash account. Post the journal entry and adjusting entry to the two accounts using the dates as posting references, and then calculate and enter the ending balance of the account using a balance posting reference. So here we have prepaid rent and rent expense. So we're going to start from our first journal entry, and that was on April 1st. And the first account we used was that prepaid rent for $4,800 on the debit side. So we're going to bring that down. So we have April 1st for prepaid rent. And again, that was a debit of $4,800. So we can go ahead and input that there. And when we scroll back up to that first one, we have cash next, but cash is being ignored down below for the T accounts, so we skip that. So then we can move on to the second journal entry right here, rent expense and prepaid rent. So this one, we have rent expense first. So that was a debit to rent expense on April 30th. So we'll use that there as the posting reference, and then input 800 on the debit side as had here in the journal entry. And then next we have that prepaid rent. So we're going to be crediting that. So that goes on this side of the T account as it did in the journal entry. And that was on April 30th. So I'm posting that as a credit to our prepaid rent account on April 30th. So now they're going to want our balances. So let's do the easy one first. What is the balance of rent expense? So that is going to be $800. We're going to bring down here on the left side, the debit side, which is the plus side for rent expense. And then we're going to need to do a tiny bit of math here for the prepaid expense. So the plus side for prepaid rent is debit side. So we're going to take 800 from 4,800 to get our balance here on the debit side. So we have the balance here. So we have 4,800 minus 800 gives us 4,000 as the prepaid rent balance. Since prepaid rent is an asset, the plus side here is the left side, the debit side. So the reason I'm putting it here at the bottom is because we have this horizontal block line here, which shows that we're doing a mathematical operation. In this case, we are taking 800 from 4,800 in this prepaid rent expense. So now, how many months of rent do we have at the end of April? Well, at the beginning of April, we bought the $4,800 of rent. So then we have 5 months left at the end of April. And we can double check the math just to calculate that. Our calculation, if we said 800 is 1 month, we would take 800 times 5 months, and that gives us $4,000 worth of prepaid rent left over. So that checks out. So everything looks good there. So that's the adjusting entry that you would do at the end of the accounting period whenever you have prepaid rent. So anytime you prepay something, right before you do your financial statements, you have to do an adjusting entry, which is this one right here. And then that updates your accounts and it would correct the account balances. So if you forgot to do this adjusting entry, instead of having a $4,000 balance on your balance sheet for the prepaid rent, it would show a prepaid rent of $4,800. So your asset would be too high. And again, if you forgot to do this adjusting entry, you wouldn't have the rent expense, which would mean you'd be missing $800 of rent expense, then which would mean your profit would look larger than it should. And you would have to pay extra taxes because your profit would be abnormally high. So let's go ahead and close out of our calculator here and check our answer. Well done. Not how I like my steak, however, how I like my accounting problems.